Mission and margin is the business of healthcare. I'm your host, Matthew Hannes, founder and executive producer of the business of healthcare. In this interview, Michelle Johns, Chief Risk Officer of IU Health, and Bob Chaput, Executive Chairman of Clearwater, discuss their innovative work benchmarking risk within and between large health systems. They also explore why insurance captives have become so strategically important to risk financing innovation. First, highlights.
In 2008 and 2009, the subprime crisis caused our investments not to do as well as they had. So our CFO at the parent level started saying, retrospectively rated, I can take money back if you're doing well. At the time, I was a little taken back by that, but it ended up being a very good thing because nothing demonstrated the value of our insurance program to our parent company more than being able to send cash back. And what we quickly realized is that the captive investment paid off in spades.
We do work with Trinity, we do work with Ohio Health, Advocate Aurora, Christus Health out of Dallas, some of the major systems. Through the work that we've done and the risk that we've examined at that granular level down to an asset and a threat and a vulnerability, we probably are looking at 8 or 9 million rows, if you will, in a database of risk. And that has allowed us to take that detailed data, roll it up, not only from an individual organization's perspective into executive level dashboards, but additionally to provide that comparative or normative data so organizations can look at where they stand with respect to other organizations around certain risk.
Our thanks to Cayman International Insurance, host of the Cayman Captive Forum, Clearwater, a provider of cyber risk management solutions, and EBSCO Health, an evidence-based provider of clinical decision support solutions, for making this interview possible. An insurance captive is an insurance company with a single customer, its parent organization. Health systems and other providers form captives to finance medical professional liability risk and other property and casualty exposures. This alternative risk financing approach provides considerable flexibility, strategic control, and cost savings. Captives became even more important after 2002, when the St. Paul companies and other med-mal insurers exited the market due to large losses. At the time, providers with captives were able to self-insure their risk and avoid huge premium increases after the market hardened. The Cayman Islands became one of the most prominent domiciles for healthcare captives starting in 1969, when Harvard-affiliated Crico established the first captive in this British island protectorate. Because of its stable history, receptive regulatory environment, and sophisticated workforce, Cayman has become not only an attractive domicile for U.S. insurance captives, but also a source of innovation and ideas. Michelle Johns, Bob Chaput, thank you so much for joining the business of healthcare today. You've both been on an amazing journey of watching the ebbs and flows of risk in healthcare. Michelle, let me start with you. Tell me a little bit about where things began for you in the healthcare space.
I was lucky enough to be invited to join one of my clients as in-house counsel, at the time it was Clearing Health, now IU Health, to come in and manage the litigation. Which was a great experience, but when you're on the outside and you need to pay a settlement or judgment, you call your client's insurer and you get a check. When you're on the inside, you have a little bit more opportunity to start thinking about how are you financing this risk and are we doing this in the most efficient way possible. The caveat that Indiana has the lowest tort limits of anywhere in the country, we still do, so my nightmares are not the multi-million-dollar nightmares of others, but still we wanted to be prudent about it. So I started in 1999 as in-house counsel. By 2002, the market had hardened in medical malpractice, not again because in Indiana, but in nationally. Dallas, Chicago, East St. Louis, Philadelphia, that had really bad verdicts. So our carrier at the time that issued our paper came to us and said, you know, we're just getting out of the business. And I said, you've never paid a loss. And they're like, we don't really care. See ya. Which prompted us to have about 6 months before our next renewal to come up with Plan B. At the time, we decided we looked at forming a captive to finance our medical malpractice and our general liability risk. And we didn't have the big picture vision in 2002. We just knew we had to find coverage in 6 months' time.
Right.
And this sounded like a great alternative. In 2008 and 2009, the subprime crisis caused our investments not to do as well as they had. So our CFO at the parent level started saying, retrospectively rated, I can take money back if you're doing well. At the time, I was a little taken back by that, but it ended up being a very good thing because nothing demonstrated the value of our insurance program to our parent company more than being able to send cash back. And what we quickly realized is that the captive investment paid off in spades because that would have all been money lost to the commercial market and paying premiums going to shareholders elsewhere. This way, we managed our losses well. The money was there. We could send it back to the parent to support the financial year-end goals. And it was over the performance of our captive since 2002 to present time, we will have returned about $80 million.
At about the same time, you were carrying a backpack at an airport. High tech had passed.
Yep.
What would you characterize high tech as an impact on privacy and security?
Well, it's hard to talk about just privacy and security, which is the bundle of carrots without the bundle of sticks, without talking about the bundle of carrots, yep. Which was $33 billion of incentive money to encourage the healthcare organization to digitize on the clinical side.
The meaningful use dollars.
The meaningful use dollars. HIPAA was an encouragement in many, many respects, at least the transaction and code sets part of that regulation was an encouragement to healthcare back in the 90s, the late 90s, to digitize the administrative data. This now was all about the clinical data. And as part of the stimulus bill, it was a huge bolus of money going into healthcare. Well, that was commensurate with that. Congress said, we're really raising the ante in terms of the amount of sensitive data that's going online. We need to simultaneously come back to the HIPAA regulations and put some teeth into them. So there were changes, pretty dramatic changes to the privacy rule and to the security rule. And there was a new regulation that was created as well called the breach notification rule. And so that dynamic was indeed more attention paid to something that, along with the HITECH Act, came major changes in penalties, major changes, increases in enforcement, a jurisdiction being granted to state AGs to now pursue HIPAA cases. There's still no private right of action. And numerous other changes that really caused the attention level to increase. That was what, circa 2010, what we characterize as the era of compliance is real. Former friends and colleagues called and said, can you help us? It looks like the Office for Civil Rights is getting more serious about this. And that was really the beginning of our journey. This looked to me, and increasingly more so, as this is just not something that the IT people need to solve. This is really emerging as a business risk management issue. And in that, I think having that experience helped me come to appreciate that a grand improvement as compared to where most organizations were operating was to create a platform that would basically help operationalize the manner in which they were managing compliance risk as well as cyber risk.
So if I look at 3M's APR-DRG grouper, well, really what that is a taxonomy of data that enables you to compare different organizations, different patients and clinical outcomes and cost. And again, applying a taxonomy to these things so it creates a mechanism to compare things which otherwise would be very difficult to compare. Does that resonate with you?
We've built a platform that, quite frankly, is agnostic of industry, but our niche and focus has been healthcare, that really helps get organizations to the point of understanding their exposures at a very detailed level that lends itself to risk rank ordering those from the most egregious based on severity and frequency to the least serious, so that from an investment CapEx and OpEx decision-making perspective, organizations have a mechanism for prioritizing how they're going to make those investments. Just by way of example, we do work with Trinity, we do work with Ohio Health, Advocate Aurora, Christus Health out of Dallas, some of the major systems. Through the work that we've done and the risk that we've examined at that granular level down to an asset and a threat and a vulnerability, we probably are looking at 8 or 9 million rows, if you will, in a database of risk. And that has allowed us to take that detailed data, roll it up, not only from an individual organization's perspective into executive level dashboards, but additionally to provide that comparative or normative data so organizations can look at where they stand with respect to other organizations around certain risk.
The work you've done programmatically to use grant funding out of the captive to nurture and encourage patient safety, reduction, and harm initiatives, which have a economic benefit to the captive, but more importantly, support the core mission of the health system. Talk a little bit about that work.
Well, we were able to utilize the captive in many different ways. One initiative was, when we started early on, is, we don't want our physicians to have losses, and we have a pretty good book of business, but we gave a substantial discount for risk management education for our practitioners. So they get 25% discount to their premium if they complete case studies. And, and they also get continuing medical education credits. So, that's not all that unusual, but we do think that certainly helps, shows our commitment to, education and concern about patient safety. We also are financing our clinical risk management incident reporting system.
The incident reporting system is essentially the beginning of the process from when a clinician recognizes that something happened.
Yes.
Go ahead and
incident reporting to me, and I'm talking about this term, it would be clinical events from and they're coded. We try to use the same language that our patient safety organizations, our PSO, uses. We have a pediatric one and an adult PSO in which we participate. So we're trying to get in common language across the system for different disciplines using PSO coding. So it's as much as a near miss to an event that actually causes significant harm and everything in between. The incident reporting system had been bifurcated. It'd kind of been patched together with paper clips and duct tape to make it work so that we would have some common reporting. Again, budgets are always tight, and we felt like this would truly be a risk mitigator if we can get a modern system being used not only in the hospitals, but really for the first time for us being pushed out in ambulatory physician offices, so that every location will be using the same system, every location will have the same choices, so we'll get improved data. And also the system allows us to do a little bit more predictive analytics. It could be housekeeping. It could be we want anyone to be able, if they see something that is not safe or find something that is inappropriate, that anyone could get in. It tends to be heavily clinician, but we want it to be available. We want it to be easy enough for anyone that is a team member to get on and report something that causes them concern.
If your Venn diagram is all incidents, a subset of the Venn diagram would be those that become inbound claims, which then become, that was your point about being able to connect the incidents to your claims management.
Right. So we have early warning system. This may result in a claim. And then we also have our captive. We manage all of our claims internally. We manage all our policy, do all our underwriting internally. So we already have in-house attorneys that can immediately start working with our hospital risk managers on anything that's particularly problematic or they see in the future may become a compensable event.
You are the interface from a governance perspective from the board and leadership team to the organization about how to determine strategic priorities and then go execute on them. Am I saying that correctly?
That's correct, yes. We have developed a system of risk scoring, and it only works because we've trained folks in our organization to be risk owners. So we have folks, different subject matter experts in the trenches that are risk owners. They are asked once a year to identify the big picture, what's coming down the road that could bring us to our knees. So the risk owners do risk scoring once a year. They're given a template. We incorporate into our scoring drop-down factors of, if this event X happens, how does it impact our brand or reputation? How does it impact our operating margin? How does it impact our team member engagement? How does it impact our patients likely to recommend score? And all of those are factored into the scoring of the risk. So those scores are turned in. As Chief Risk Officer, I look at them. I try to make sure that they make sense with the scoring, smooth those over. They go up to our senior leadership, who ultimately decide on the top 10 for that year that we will prioritize and allocate our resources.
And as you live in this compliance world and you help organizations think about this,
right.
What do you think is the scenario?
It's predicted by the year 2020 or 2021, there'll be 50 billion of those devices that are part of the quote-unquote Internet of Medical Things that are out there.
In the U.S.?
In the U.S.
Wow. Okay.
In the U.S. And so the pace at which those are being deployed is pretty intense. And oftentimes they're deployed by an individual department within a hospital without the necessary overall governance or hygiene around that. But back to the point, there are simulations that are being done. I know a fair amount of work was done at, I think it was UC San Diego, by a Dr. Damath, if I remember his name correctly. That was an ER simulation of a cyber attack and how people would react in that scenario. There have been other simulations where changes have been made to wireless IV infusion pump, and clinical staff asked if they noticed anything wrong, and they didn't. In fact, 90% of the organizations that have been subjected to and ultimately ended up in a settlement agreement or a corrective action plan with OCR, 90% of them have been cited for failing to do a risk analysis properly, for among other reasons that the biomedical devices were not included. Not so go beyond the world of traditional IT assets, the EHR system and radiology and pharmacy, et cetera. OCR is now looking at every device in every facility and every line of business needs to be included.
You know, I think there would be an argument that if we knew or should have known, and the physicians or practitioners are relying on that data to treat the patient, and they make judgments based upon that, I mean, you might argue that it would be medical malpractice, but I also think there's the answer that might be general liability for just failure to managing a piece of equipment versus patient care.
The plaintiff attorneys are not there yet. They're worrying about other big macro issues, and for example, opioids is a big agenda item for plaintiff's attorney right now. And I was told, you know, cyber's probably right behind it. That is connecting the dots between cyber and medical professional liability. So I think we're still in that zone right now.
The other issue,
where
it
we're
could
not
be
sure.
products liability. Would we have an action against the manufacturer of the product for failure to adequately secure the equipment so that it couldn't be breached?
Is there an opportunity to take data about risk, not just cyber, but all types of risk, and from a taxonomy perspective, standardize it so that we can compare between organizations and perhaps look retrospectively and say, oh, this score, using this taxonomy, this score is predictive of future loss? Or is that a bridge too far?
If we use that sort of mechanism to assign a value to those risks, then yes, I think there is a great opportunity for there to be an industry standard data set against which all organizations can compare themselves, and furthermore, the basis of predicting what future exposures may be. So I'd say yes.
Michelle, your thoughts?
I would say yes. I mean, if you look at patient safety organizations, that's the whole goal.
Yep.
So the hospitals can share data. You have a common taxonomy, so you have to learn to code your events to match the taxonomy. But at least then you get consistent data, and you can see, number one, that other people have the same problems you do, other hospitals, other facilities. But then you can also work together to find out how you mitigate, the future losses in that regard. So I think you'd be like a PSO for cyber.
That's right. That's right. Yeah.
When you got on the plane to fly down to the Caymans, what was going through your mind? I mean, it sort of sounds interesting. I'm flying from Indiana to the Cayman Islands to manage my risk financing. Yes,
absolutely. Well, when someone had first suggested Cayman, I'm like, yeah, right, that's going to happen. And it did, for all the right business reasons. It's been such a great business partner for us with the flexibility that the Cayman domicile offers and the ease of changing our business plans as our business, and we'll talk a little bit about this, as our business has evolved and changed, and really, it's no longer just purchasing insurance and worrying about how to pay the claims, but it's really evolved as a platform to support our enterprise risk management program over the last 16 years.
Incredibly interesting conversation. Michelle Johns, Bob Chaput, thank you so much for joining the Business of Healthcare today.
Thank you.
Thank you.
This interview was made possible by the Insurance Managers Association of Cayman, Clearwater, a provider of cyber risk management solutions, and EBSCO Health. To watch, listen, or read other BOH interviews, visit bohseries.com or search Business of Healthcare and our red logo wherever you listen to podcasts.